Test. I'm not sure if that works.
Yeah, I'm getting all full 5 bars. It's super strong.
Okay. Let's see. Can you guys see my screen now? Let me know if the connection is smooth. Hey, good morning, Raj. I don't know if I said good morning yet. Okay. I'm wondering why I can't hear sound on the TV. Oh, okay, I think I know why. Actually, I don't know why. Yeah, what was that? Let me just try something real quick. Like some random video. Oh. Why not? Okay. Well, I guess we don't really need sound for today. As long as you guys could hear me, that'd be fine. So. Okay, so today, I've been reading this. I'm on page 123 of the gold report, the one that they released. I wanted to talk about gold today, or it's not just about gold. Well, it is about gold, but like they talk about the U.S. dollar, the macroeconomics, and the government, and the move away from like using the dollar, et cetera, et cetera. I wanted to talk about that today, but I only got through half of this. There's a ton of information, so I'll probably do that talk next week. So what I decided to do instead was make today's conversation about 6 months into the year. And if you guys saw Friday's price action, it was pretty awesome. Right here. You're not on the go-to meeting, right?
No, I'm going to go to right now.
Okay. Well,
It's gotomeeting.com/volatility.
yeah. Oh no. Wait now. Just want to make sure that they could hear or see. Hey, Liz or Raj, is this smooth on your end? Okay, all right, awesome. Because we're on a hot spot. Just wanted to make sure. Okay, so yeah, we're at the 6 month mark. Markets did. I kind of like where markets are going right now. It's kind of consolidating, but I do like the fact that the FANGs and the QQQ is a little bit higher. The FANGs are higher. IWM's higher. But today I want to take a look. We're at that 6 month mark, and I think that's your sound. Okay, awesome. So let's begin. So actually, before we get into it, let's look around the world real quick. Got muted now. Okay, so this is what it looks like for the indices. I gotta mute. Hey Max, welcome. Okay, so this is what it looks like for the indices right now. So looking at Dow Jones, still consolidating. S&P 500 still consolidating, holding the 270. We're going to look at the technicals in detail in a bit. NASDAQ breaking out 7,000, so I like that. IWM at all-time highs, breaking out higher. I like that as well. For the Nikkei, the Euronext, and the Dax, they're bouncing off critical levels, if you can see it right here. I'm seeing Nikkei bouncing off 22,000, 3,400 over here, and then 12,600. VIX is below 15 again, so I like that. Real quick to energy, let's say, just to make sure you guys are, well, I shouldn't say playing my style. It's really up to you how you want to play your style. But let's say, you got long on a breakout. You got long on a breakout, right? Let's just say right there. Right there, long on that breakout. Right? You stay long, and you perform great risk management would you cut your loss somewhere here? That's kind of how I would play it. All right, and it looks like oil setting up to go a little bit lower. We'll see from there. So starting to see my gas prices go up. Anyways, that's crude oil. Let's go to bonds. It's been pretty volatile. Again, that's what it looks like. Go over to metals. Gold is still down. Look at the weekly on gold, still down. Grains, just pointing out corn. So we were looking at corn now. Corn is kind of breaking down. So not looking too good. Doesn't look like it want to continue in the short run, but who knows. Currencies, dollar rallying. So that's something to take note of. Right? So if the dollar rallies, then we start to import less. We start to import more because we could buy more with our higher purchasing power, but we export less because people can't really buy our goods because it's more expensive. So this kind of puts a tightening on the corporate financials because earnings kind of go down. So everything looks kind of tight. We're going to go over it, but I just want to do this quick review. Cryptos, I did take a position as of June 2nd. It looks like it wants to bounce around this area. So we're going to look at that as well. Looking at, that was Ethereum, this is Bitcoin. Right now, my stop loss for Bitcoin is 7,500 or 7,500. So I did take a new position, and we'll go over that in a bit. Okay, so anyways, that's the quick around the world. So guys, it's been 6 months. This is the performance year to date. What do you guys think? So the one that outperformed the past 6 months, oil, at the top at 10%. And we got small caps, about 7%. And then everything else. So US dollar, natural gas, IWM, small caps right here, yen, China. Let's see, where's the SPY? It's not in there. SPY right there, 2.53%. So it's been a tough 6 months, but we're still positive on the year. So I'd say that's okay. That's not bad. That's we're positive. We're not negative. So let's see what happens the next 6 months. Reason why I like to break this up into time frames is because I think institutional investors, they do the exact same thing. If you just take a look at SPY or maybe QQQ, let's try that. It might be clearer with QQQ. And we'll go to interactive. Notice the line right there. Second half, they might be pressured to perform. So I like this breakout right here. We're going to look at this in detail in a bit. But this is the performance so far. Let me know if you guys have any comments. For the sectors, year-to-date sectors, this is the performance. Technology continues to be the most outperforming sector, followed by conglomerates, though I think this data point might not be accurate because there aren't that many conglomerates. Let me just check real quick. Finviz, Screener, go to conglomerates. Bam. Okay, never mind, just 5 pages of conglomerates. So this segment, or this sector, outperformed. So we're just really looking underneath the hood of all the stocks right now. Services outperform. Let's see, basic materials, so like oil and gas right here, but especially tech. So I continue to watch tech. That's my go-to. If you want to look at the year-to-date 6 months for the countries, this is what it looks like. Let's try to make this bigger. Shrink this one. Shrink this one. So this is what it looks like. So again, US, where is it? USA. Right here, 2.9. That's our performance year to date. So the high performers are Chinese stocks, Sweden, Italy, Israel. That's just what things look like right now. Let me know if you have any comments on that. You guys find this interesting? I hope so, man. Let's see. Okay, moving on. So back to the indices. So I did a little bit detailed analysis on it. SPY 270 is my line in the sand. It's setting up a bull flag, but at the same time, we're seeing a rising wedge. So this is what the rising wedge looks like. Maximize this. You know what? I don't track that segment of the market, but I could tell you it could be something like, let's say for example, so the data could be kind of like this, where they made something like a small dollar amount. Let's say they made $100, and then next year they made $200. So therefore the data point gets really green. I don't track that segment. I just want to show what's going on around the world, how the U.S. kind of performed in the 6 months compared to everyone else, and who didn't perform down here. But that's not the ultimate emphasis of today. So I'm not sure as to why. We could kind of segment out the stocks and see if we could find what stocks in Colombia or ADRs in Colombia and play those. But I'm mainly a USA player. Just want to give you a relative feel around the world for that. So going back to this, so this is my technical analysis of the S&P 500. We're going to also look at QQ, IWM, and Dow Jones, DIA. But right now, in the most immediate short to mid-term pattern that I'm seeing is this flag right here. I know this week we kind of broke down because of negative news, international news, but we kind of retraced back above the 270. So for me, I continue to like that because 270 was my line in the sand. I did get a little insecure this week, I have to say, right? Because it broke down that one day right there. Why U.S. Colombia so green? Yeah, so I just answered your, you sent me a private message, okay. Yeah, I just answered your question. But anyways, going back to the SPY. So right now we have a bullish pattern right here. We're still respecting the 200-day moving average. I like that. Triple test right there. And then we had multiple break attempts right here, where I thought we did break down, and then this would have played out the rising wedge right there. But we went back up, and we're still holding the 270 level. So I'll continue to like that. I want to see this thing break out next. So 270 area, 100-day moving average, and that's what it looks like. A ton of support right there. So I wouldn't say it was a tough week. It was actually a pretty good week for me. Especially, I caught the AAOI move. We'll go over that one a little bit.
It was such a crazy week, and the bottom line, it was up 10 points S&P for the week, like 15 points.
Yeah. Since JC's here, I also want to review his style of charts, just to see what it looks like. So he likes to look at the weekly. We'll go to interactive, and then go to weekly. So his style above the 20-day moving average is bullish. Below would be bearish. Break of the 50 would be very bearish. So 260 was also my level of watch.
Can I make one point on this chart? Let me just take the mouse real quick.
Yeah,
I want to show
go for it.
So what I wanted to basically do is on this one, on the weekly chart, which I look at the most, one of the really important things to pay attention to is this little histogram right here. So basically, this histogram, if you look at this histogram, as long as the histogram is getting smaller and smaller and smaller, that means the stock market is going higher. And what you're going to worry about if this histogram starts to go in the opposite direction, it gets a bigger, like it did right here. Like it went from here, it got smaller, smaller, smaller. That's when the market drops. So if for some reason this histogram gets to a bigger level, going lower, and then this market drops, then that's the beginning of a more sustained drop that we can go all the way down here. But if we get a histogram next week, it goes higher and crosses above the zero line, it goes higher, then we're going to go in this direction and go higher. So to me, this histogram, if you guys pay real close attention to what's going on with the weekly histogram, that tells you a lot on everything. I mean, if this is going up like this price is going to go up. If this histogram is going lower like this price is going to go lower. So to me, I'm waiting for this histogram to either step higher, so we go higher prices and get away from this level right here, or if we get a histogram lower, that's going to be the beginning. Usually lasts like 3 to 4 weeks anyways. So that's the point I wanted to make with the histogram.
I also want to point out that we're going to get a crossover soon right here. So keep in mind, we're on the weekly chart, and so things are moving he's using a slower model. JC's model is a lot slower, but the slower it is, the more data it includes, the more robust it is. So I respect this one a lot more than the daily. So let's say if I find a support on the weekly or resistance on the weekly, I put more emphasis on that resistance than I would on the daily. So keep in mind what time frames that you're trading at. For me, which indicator is that? What are you talking about, Sylvia? We're just looking at the S&P 500. We were at the weekly, and the indicators that we have on, or the overlays, is the Bollinger Bands, right? With the 20-day moving average right here. So that's one of mine that I use, or 21-day, and then the 200, or I'm sorry, 21, 50, 100, and 200, all right here. So on a weekly weekly time frame, this is what we're looking at. So I'm looking at 270. He's looking at above 20 MA. Did you have a comment?
The bottom one.
Oh, the bottom one? It's MACD and RSI.
Histogram right below it. It's a MACD line.
So this is part of the MACD, the histogram.
Okay.
Yeah, so his technique's very technical based. Mine's more price action and moving averages. I do look at these, but I put more emphasis on here. So if you recall, the order of operations that I like to focus on is price action first, so anything price, time, and volume, and then after that is the price pattern, because it's a collective or aggregate of price, time, and volume. And then from there I started looking at the indicators and oscillators, because they're all derivatives of the price, time, and volume. So we're just looking at the weekly chart. So far, according to his rules, I would say it looks good. Yep. This crossover right here would look very bullish on the weekly. We could pull up the monthly too, but the data will be even more slow. So if you were to play a monthly and you make a model, let's say the 20-day moving average. If the monthly breaks the 20-day, that'd be really bad. Weekly would probably agree, and then so would daily, because that on the daily it'd be a break below the 200-day moving average. So my favorite style, going back to the S&P 500 or SPY ETF, daily, this is what it looks like. We're still holding the 100-day moving average. We had one day out of the week where we broke down, but we're still above 270, and I want to see this break out. Now, on the other side, hey, no problem, Max. Thanks for thanks for coming. For the QQQ, I don't have my drawings on, but this is a breakout. So I have the drawing over here. So I want to say a quick note on SPY real quick. So even though there's a bearish rising wedge that I drew right here, right, on the S&P 500, I still remain bullish or long biased, since the indices are a different animal than stocks. If this was in stocks, I kind of take it more seriously, because in stocks they respect it a lot more, but my experience with drawing the wedge patterns on the indices, it's okay. It's not bad. It works, but I feel like the indices have a natural long bias, because it's something that's tied to everyone. Everyone's playing it. Like if we're having a good jobs report, then corporations are hiring more and people are making money, so they start to purchase assets like real estate and stocks. So I have a long bias on the S&P 500 until I see critical breakdowns in prices, such as the 200-day moving averages, hearing that corporations aren't really buying their stocks, they're not really hiring anymore, earnings are doing bad. So all that collective information will start to tell me like, oh, this market's kind of turning. But as of late, when I'm listening to earnings calls and stuff, Apple repurchasing their shares, even Yelp, right, repurchasing their shares since the beginning of the year with an average $40 mark. And then Apple hiring more people, Facebook hiring more people. So to me, it still sounds like the momentum's still going, and I'm watching the markets. The 200 days still respected. So in the meantime, I'm still bullish. In the most immediate time frame, or short to midterm, I want to see a breakout right here. So that's my analysis of S&P 500, or a little bit of the economy too, I would say. Key thing to note here is to understand that different tools, techniques work better with different instruments you trade. So yes, one of the techniques here is the pattern analysis. just something to keep in mind. There's a pattern here. So let's say this flag right here, this little flag that we have doesn't play out. Let's go to blue. If this pattern doesn't play out, right, it's going to fail and then break this wedge. So then the wedge will be in play, and then the next area would be the 200-day moving average again in the 265, right? So if you recall previously, we were stuck in this range for quite some time between 270. Sorry, it's getting a little messy, but 270 and 265. So we finally broke out of that price area, and now we moved on to another price area. So it's kind of like stair steps, you know? The way I trade is sort of like stair steps. So I want to see the next step right there. So keep in mind, as indices are a different animal. I'm long biased on these. Let's go back to the QQQ now. QQQ breaking out higher from 170. Quick drawing on that. This is what it looks like. So the flag that I told you, breakout, right? I put H2 breakout because June, second half, not Q2, but H2 breakout. So this is looking good. Volume could be better, but not bad. And that's the breakout from the 170. So I like QQQ, which is basically like tech stocks and stuff. Moving on.
You want me to send you the S&P with the Instagram link?
Yeah, you're welcome, man. Let me know if you have any comments on QQQ, but that's basically the setup I see. We could jump to advanced and then take a step back and look at it, see what it looks like. Did you send the link already?
Yeah.
Okay. Is that S&P?
Hit send already? Yeah.
Okay, so let me just do a quick discussion on this. So that's the 170 break on the indices, which with some decent volume. So I like that. It could retrace, but I want to see it continue to hold the 170 for us to go higher. If we break 175, then you kind of know, guys, it's going to go even higher. That's QQQ. So let's look at one of the charts that JC just sent. It's Spx Weekly, so we're going to jump back to Spx, looking at the weekly. Would you have to comment on this one?
So, yeah, basically, So basically what I wanted to say on this, I wanted to show you guys, you can go to stockchart.com under free. It's free. You can just put this under the MACD histogram is called, which is right down here. It says MACD histogram, yeah. So it's alphabetized, so you're looking for MACD histogram, and that's a very important one because what it does is gives you when the change of trend in a weekly is. So for example, if you look here, you see how this histogram was a lot higher, then it went lower, 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 lower. Took a little pause, went lower, 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 and as you can see, the prices went from here to here. And then it turned around exactly on this day, a negative 25.10, it started stepping up higher, 1 week, 2 week, 3, 4, 5, 6, 7, 8, 9, 10 weeks. And then for 10 weeks, it went 1, 2, 3, 4, 5, 6, 7, 8, 10 weeks, that's where we stand today. So I'm bullish as long as this histogram keeps stepping up, and if it turns green, it's even better. But the problem is going to arise if we get a histogram that goes lower for 1 week only, that's going to be the beginning of a correction lower that's going to be significant. As long as this histogram keeps stepping lower, 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 lower like that. So this, to me, is extremely important on the weekly chart. So if you guys pay attention to that, that's going to give you where we're going. And right now it looks bullish as long as this histogram keeps stepping up. And then you can use this on any chart, any symbol or anything. But it's really important to just keep an eye on it.
Awesome. Thank you, man. Just flip back to this real quick. So guys, I know I'm kind of jumping around, but just kind of give you a quick overview of what we're really talking about today. I just went over like the 6-month performance here today, and then we talked a little bit about indices. We're going to jump into other segments as well. World indices, we're going to talk about volatility, we're going to talk about bonds, we're going to talk a little bit about commodities, cryptocurrencies, and then the FANG stocks. So I know in the past we look at these stocks, but then now I realize like the FANGs as a whole is a good indicator to look at. So we're going to talk about that. We're going to talk about the macroeconomics, things that you should keep in your mind. And then we're going to talk about other markets. So I'm going to dive in a little bit deeper into the digital businesses, physical businesses, and even commercial real estate today, and show you like the different multiples that they're trading at. And then at the end, we'll go over stocks, and then I have some updates for you guys. So that's the game plan for today. The real one, or the one prior to all of this, was actually, we were going to talk about gold, but I ended up not being able to complete the 230-page report in time. I'm only halfway done, so that will probably be next week. But so far, the report is pretty darn interesting. I'll tell you that. So going back to it, so we just looked at SPY, we looked at QQQ. I showed you guys the pattern. Let's move over to the Dow Jones. Nothing much to comment on the Dow Jones TIA ETF. But this is what I'm seeing. I'm just seeing it stuck in a channel, right? It's still respecting the 200-day moving average. It doesn't look as good as QQQ and SPY, or even IWM. But think about it. There's SPY, QQQ, IWM, DIA. 3 of the 4 indices are kind of looking a lot better than this one. So it's leaning towards that direction. But going back to it, yeah, Dow Jones, this is pretty much all I have to comment. Below 100 MA, stuck in a trading range or channel, nothing much. It'd be great if this could continue to hold 245. That's pretty much it for that one. Now let's look at IWM.
All-time highs.
Yeah, so this one kind of snuck up on me, or like, I'm usually looking at QQQ, DIA, and SPY. But this one, it broke out. So let's practice our technical analysis. Resistance, resistance, and then finally break out, right? And then once we broke out, resistance becomes support. And then that support bounce, and then break out to all-time highs. So a nice retest. That breakout was at 160. So you see the style I kind of play. I look for that critical line in the sand that I don't know if it's discretionary. I try to make it as objective as possible, but I try to find a line that everyone is watching and playing, and if it breaks out that line,
it's pretty objective.
Yep.
There's no.
Yeah, I mean, okay, so there are times when it'll look something like this right here. See, you got support right here, or yeah, support right here, and support right here, right? For me, I would try to make it objective, and I would just say that the support is really at 150, right? I will ignore all these, attempts to pierce through the 150. Well, this one too, but it retraced back over. So I find the most objective price level or line in the sand, and I play that one. That's really my style. And then 160 right here. So we broke out this range. So IWM's looking good, small caps. Let me know if you guys have any comments on this, on the technical analysis. I know I'm going kind of quick, maybe. I like, these days I think I just, learn so much, practice so much, apply so much that I don't know if I'm going too quick for...
You're at the right speed.
Okay, cool. Just let me know if I'm going too quick and I'll slow it down and explain it better. But that's IWM. So things are looking better. Let's jump to world indices. We looked at it earlier. I said that Nikkei is bouncing, Euro bouncing, Euro Next is bouncing, the Dax is also bouncing at those critical price levels. I know some people just joined, so I'll flip it back and look at it real quick. Right here. So Nikkei, a little bounce right there after, a long move, retrace, bounce. Same thing right here, Euro Next, 3,400 bounce. And then the DAX, bounce right there, 12,600. And the thing for VIX, below 15. I know it's spiked, but we're back below 15. So kind of weird, right? Like it looks scary early on in the week, and then things just kind of went back to where I was planning, or back to the plan. FTSE. So I know we don't look at this, but I want to show you another resource that you could go to kind of look at it. Wall Street data. Wall Street Journal market data. So if you guys geek out to dashboards like me, you know that this is a dashboard right here. Or if you're in engineering and you program like a metrics dashboard or whatever, it's a really useful tool. Like when I'm at work and I want to look at the markets, I'm really just looking at this, seeing like, oh, what's going on the daily in the NASDAQ, the S&P 500, we're rallying. But I also look at, like some quotes, my recent quotes, major news, what's going on. So that's a dashboard, but we'll go into this another time. What I wanted to show you is the Wall Street Journal dashboard. where you could look at other things in the world, right? You could look at major stock indices, which is what we always look at, the bonds, the currencies, the futures, and then other things right here. So just a nice dashboard to look at. So I wanted to point out the FTSE. What else did I have on here? FTSE, Shanghai Index, looking a little bearish, but this is the FTSE. We'll go to 1 year. Let's go 3 year actually. So this is the 3 year. So imagine, we look at S&P 500. This is the European version of the S&P 500, or the FTSE, the London version. It's higher, right? You got a high of 7,700 right here. We're hanging out like just right there. To me, I consider that bullish because you see all this resistance right here. I know it's not the standard chart. Well, let's see, we do advanced chart. We perform a little technical analysis. So why am I showing you guys like around the world and stuff? It helps me at this point because I want to know, well, if we're really going to crash, right? If people say we're going to crash, we're going to break down lower, I want to see if the rest of the world kind of agrees or if some other major economy is kind of leading the way. But I don't see it as of right now.
Can I have one input on which is leading the way?
Yeah.
If you look at Germany,
Dax?
Germany is kind of leading the way down a little bit on the weekly chart. I'm going to put a link up with the histogram up there so you guys can see it. But I'll show you. You can just pull this up.
So I pulled up you said the monthly on the DAX?
Usually what I do is I look at the ETF for Germany, which is EWG.
Yeah, so I have the Dax Index Futures right here. And this is what I'm seeing for the DAX.
I usually use the ETF because that one I can always, if I want to short it or go long, it's kind of good to I don't know if this is the one. Let's see. I'm going to have to update this first and then, I'll go ahead and, I sent the link, I don't know if it worked, but on Germany, on the weekly.
INDU, Dow Jones Industrial Average Index. Is this the one?
Yeah, let me go ahead and update this.
Well, I mean, to me, I see a breakout right here, and then several retests. As long as we remain above here, I mean, all around the world, things look okay. I don't see anything scary.
I just sent the link. Yeah, right there. So basically what I was saying, remember how I told you guys about the S&P, how I'm worried to make sure the histogram doesn't turn lower because it was going high.
Oh, I see.
That's what happened in Germany for like a week ago.
Is this the weekly chart?
This is the weekly chart, and it's in Germany, right? So basically what's happening in Germany, Trump is talking about all these tariffs on German cars, and it's kind of adding some uncertainty to the economy, and also Italy's problems. So basically 2 weeks ago, the histogram went lower for 2 weeks, and knew what happened to the price, right? It hit the top, middle of the Bollinger Band, the 20 MA, and it went lower. And now it's already made its move lower. Yeah. So as long as the histogram keeps going lower every single week, this thing is going to keep going down. It's going to break 3120, may go down to like who knows where. Unless we get a histogram and turn around and go higher, step up higher, then we're okay again. But this already made its problems, and now it has to deal with it. The U.S. has not done that. The U.S. is right here, and it keeps going higher. So the U.S. looks good, Germany looks horrible. So that's what I wanted to share with you.
Okay. Pull up that futures chart on the DAX real quick. So you were just looking at, that was a weekly?
Weekly chart. It already made its move lower, which is very dangerous. And you'll see as it develops during the weeks, you'll see what I mean. And the U.S. has not done yet, so I'm still bullish on the U.S. until it does that. Germany has done it already.
I mean, it's hitting its head on 13,000. It looks, to me, okay, if it were to retrace, I want to see another test at 12,000. Right. But as long as it's above 12,000, my longer term view.
We're not talking about longer term. I'm just talking about the weekly move. The next 3 to 4 weeks is danger time for Germany. Yeah, so I'm just trying to get a big picture. Oh yeah, no, you're right. Yeah, you're right. Monthly wise, and
things. No problem. I mean, I'm seeing okay across the board. Yeah. Like, keep in mind these are the heavyweights around the world, so that's why I keep looking at it. Right. But let's go on to the next.
I just wanted to show the difference between U.S. and Germany. How they're both doing.
Shanghai Index, we haven't looked at that for a while, or Shanghai Composite. I use the ETF. it's really up to you, but it's broken the 200-day moving average, and it hit its head on the 200-day moving average. So this is what it looks like bigger picture. So to me is, if this keeps going down, another opportunity in Chinese stocks. But I am playing one. I'm playing BABA, and this one did good this week. But let's look at the Chinese stocks segment real quick. So we're gonna filter FinViz again, China. Right, and then we're gonna arrange it by market cap. So biggest down, BABA's number one, and then we'll go to performance because I want to see how these guys did for the past 3 months. So like this one went down a lot. This one was a high flying one before. I think Sylvia, you're watching NTES, right? JD going down 17%. So just be aware of what's going on around the world. So everything looks good. These ones are bouncing. Our indices are kind of majority of them are hanging out higher, and one's going even higher. FTSE higher. Shanghai index breaking down from 200-day moving average. Though I'm not really concerned about this. I don't know why. Looking at volatility, right? Because you come to a volatility club, you gotta understand a little bit about volatility. Okay, we're still in contango formation, 5%, though that kind of switched over to 1 to 2% this week, with 16 days to the next contract setup. So keep in mind, futures contracts expire. Again, VIX is below 15. This is what the curve looks like at the moment. Right? Positive contango. This is the spot VIX, the VIX index, where it currently is trading at. And these are all the future contracts, or the contracts out in the future. They need to travel from right to left. So it's going down. It needs to hit the spot. Those are really technical terms right there. The futures contracts needs to hit the spot contracts. But that's what I'm seeing. If this could go to double digit, that's even better. So I feel like we're kind of at an inflection point for this next half. If not, then if we start breaking down, then maybe further downside. But right now, I know it's been a long and brutal 5 months after January, right? Since February, it's been freaking brutal. A lot of chop volatility up and down. But let's see, because this is the second half. I want to see if fund managers are plowing money into the economy or into the stocks. But that's what I'm seeing with volatility, guys. Moving over to the bonds, yield curve is higher, but I don't see any signs of inversion, right? So if the Federal Reserve is reducing their balance sheet, at the same time raising interest rates, which ultimately creates financial tightening, I don't see anything going on in the bond market segment, right? We just analyzed the stock market and also the stock market around the world segment, and then we analyzed the volatility segment of the USA only, right? Because there's also volatility on Nikkei and stuff, but since the US markets are the biggest, it makes more sense to analyze the USA volatility. Now we jump over to the bond segment. This curve is higher, but it's not inverted. Inverted means pointing up. So same dynamics as the futures curve, is still pointing down, right? But I don't see any inversion. So you guys could look at this as well. Again, it's the dynamic yield curve from stock charts. This one right here. And I like to have some fun and just move the the thing back and forth. So if you look over here while I move this over here, right? So pay attention over here. If I move from left to right, you see how it's going higher? So interest rates are going up, but there's no inversion like this right here, right? It's not inverted. So the inversion in the bond market it's just another indicator that we could potentially use to kind of detect a market downturn, right? Like how it did over here as well as over here. All right, inversion. Okay, inversion, downturn, inversion, downturn, and then as of most recently, no inversion, right? Dip buy, no inversion, but just higher rates. So it's elevated, And if you guys didn't understand that, I'll even try. It went from where it is right here, it was over here. So it elevated up, but there's no inversion. Like there was inversion here and inversion here. So the bond segment looks, I don't see any response in that yet. Negative responses. Now, how about this? A pop quiz question, or just a question. Would you buy bonds right now? Like, I know we talk a lot about stocks. Let's just do a little comment on bonds. As we know right now, the macroeconomic setup, real estate prices, stock prices, and bond prices are all at highs. So, would you buy bonds? Because they're known as like the safer assets, because they're fixed cash flow. So, let's say you bought a 10-year bond at 2%, right? Now, we know that price and interest has an inverse relationship. So, if the bond price goes down, the interest goes up, right? So, would you buy a 10-year bond right now, knowing that interest rates are going to go up? If interest rates go up, then your bond depreciates, and so it's against your position, but not really, because you locked in the interest rate. So you're still going to get paid the same, if that kind of makes sense. Like you bought the bond for 1,000 and it pays 2%. You're still going to get that 2%, but the bond went down to, let's say, 900, but you're going to get paid 4% now, so the interest is higher. So your bond, you lost money on your bond, but you're still going to get your money back. The only thing you lost is your ability to sell, right? Because if you sell it now, you get 900, and you can't get the 4% interest where you previously got in until it expires. So that's the nature of bond. So the question is, it's better to buy the bond when it's cheap and let it appreciate like a stock, because as it appreciates, the interest goes down. But that's okay, because if it appreciates, you could sell it right to the market and take your gains, right? Or you could wait, for the interest. That'd be even more awesome, because if you wait, you get the interest, the higher interest, and the bond price appreciation. So that's something to think about for the bond segment. But that's my quick comment on that. Commodities, we are trending higher in commodities. I use an ETF called DBC. It's an ETF that includes all commodities out there. So according to weight. So this is what the commodities segment looks like, trending higher from from an all-time low, or from a low, not an all-time low. So keep in mind, this DBC has like oil, gold, corn, all the grains, all the metals, all the energy. It just gives you a complete view of the commodities segment. So in this world of, in this current economic setup of everything kind of overvalued, right? Commodities are at the lows. Just something to take away. Moving on to cryptocurrencies. So not just commodities are at the low. Bitcoin, fell back down recently to where I got in. So let's see. BTC, Bitcoin, and Ethereum potential short to midterm bottom here, which is what we're seeing. I'm going to pull up the charts in a second, which is basically near the most recent lows, making markets presenting another opportunity is what I'm seeing. So I executed another position, and I want to show you the model that I'm kind of just trading to keep it simple. Let's see. Let's pull up the cryptocurrency segment. So the price I got in is like 580, 590. I'm still holding. I'm expecting a bounce, and my stop for Ethereum would be 600. My stop, actually no, I'm not really looking at Ethereum, but 600 would be a point. But for this one, I'm looking at 7,500. If Bitcoin cannot hold 7,500, I don't want to be in position. So that would be right here, somewhere right here. This is the 1 hour, by the way. I want to show you guys that. I played this one, and then now we're almost there. So I'm anticipating a bounce for Bitcoin. So I bought XRP, Ethereum, and some Stellar. I did not buy Neo. I think Neo Steve is online. Yeah, he's online. Yeah, I didn't buy any Neo, like the whole Neo and gas. That's a cryptocurrency thing. Now, interesting in the report that I'm reading, there's actually a chapter in here on cryptocurrencies this year. So they're acknowledging cryptocurrencies. But we'll go over that one next week. Let's see, moving on. So cryptocurrencies, actually let's pull up the technical chart, trading view, one more time. Okay, there we go. So what we have here is Ethereum, guys, and I want to show you all the patterns, all the candlestick advanced stuff in action. Once I can get it to load. So this is me applying, collectively everything that I've learned, right? So you guys know that I caught, a move over here, and then I played it up, and then it started breaking down, and then my stop was 750. And I haven't been in position until now. And I want to show you the reasons why I got into position now since my 750 exit. So I exit over here just because it didn't respect the trend there, but I want to see. Okay, so my objective stop was 750. Following that is set up a head and shoulders. Right? That tells me it wants to go down, and then it finally broke down right there. Right? It broke down and then it set up another pattern right here, a bear flag or bear pennant. And then as of most recently, we have this 2 daily candlestick pattern right here. This is a reversal. If you pull up the weekly, you'll see something else. So that was one indication, but I didn't take a position up until over here. So I'm playing this reversal with now a breakout at the resistance. This resistance. So I'm anticipating higher prices. So that's one way I'm looking at it. The other way, playing a model, I'll go to Poloniex, one of the exchanges that I'm using. I'm playing a simple model, and I want to show you that model. And you guys can play this model too, if you want. Just combine it with some price patterns. For those of you who missed out on the Ethereum trade, I'm not recommending a buy or anything. I'm just saying we revisited another attractive level, right? Well, it wasn't as attractive as this one, but we revisited. So I want to show you the model. I hope you guys can see the model already. It's kind of in your face, but I'll point it out. So if you guys know, I took a position somewhere here. You see this crossover? Uh-oh, wait now. You see this crossover right there? Of the pink and the blue crossover. And I sold out right here because it was just, this was a discretionary sell. And then I got back in because I noticed a higher high. But the model still remained. If you look at my red line, the model still remains. It was only up until somewhere here, 750. I think that might be 750. The model failed. And then now it started pointing down. So I stayed out of position. Almost got in right here, but stayed out of position after this breakdown, as well as a head and shoulders pattern, right? You see how I'm applying everything I learned, and then a breakdown, right there. Breakdown, consolidate, pattern, breakdown, and then as of most recent, the model that I'm playing kicked back in. So I took position right here. So what model am I playing? It's just the 20-day moving average and the 50-day flipped onto the 4-hour time frame. Right? So I'm anticipating a move. If this model fails and the price breaks down, then I'm out until it presents an opportunity again. Though now looking at that's the technical charts on Ethereum. We could do the same thing for Bitcoin, but I won't do it. The fundamental or the macroeconomics, again, is like everyone has a phone now. We're seeing digital payments. We're seeing fintech, venture capital. What else? The application makes sense. It's a public ledger, right? Versus like an invisible ledger that a bank holds. Other fundamentals. Can't think of anything right now, but I want to see if we can move higher from here. So just not an educational recommend to buy, not a recommendation to buy or anything. Just for all education purposes. That's what I'm looking at. That's my position. Let's see where it goes from there. Upon your entry of the MA cross, do you have a systematic stop loss set right after entry? So yes, the stop that I have is, so if you know how I look at the stock market, right? S&P 500 and let's say NASDAQ, I would say Bitcoin is like the S&P 500 for me, and Ethereum. Well, I'm playing Ethereum and Ripple and Stellar. I'm playing those directly, but I'm using Ethereum as my stop loss. So my systematic stop loss, or objective stop loss, discretionary stop loss, is 7,500. So I took a position, not at the cross, but like at a a setup within this pattern, and I'm holding it. And if we break down, if 7,500 cannot hold for one day, okay, I'm not saying like you might see a 1 hour break of the 7,500, but I don't count that. I wait for the daily chart to show. So I'll flip over to the daily right now. Right, I'll wait for a daily close below 7,500. A complete close. And then I'll cut my loss. That kind of answer your question? That's one technique I use. Another one is, okay, so I use that to stop out, but then the model might say stay long, right? If the model say stay long, then I'll wait for the next potential to get in. Maybe like a retest of the 7,500 and then a break above, then I'll get back in. The hardest part is getting in and then capturing that trend. And then once you capture the trend, you kind of sit back because you're like, oh, right. And then you kind of just move your stop loss up higher and higher. Like how I did over here, right? I moved my stop losses higher and higher, and then I got stopped out right here. So this wasn't a model fail. The model still traded, but I got stopped out because of my own personal objective stop loss. So it comes down to your style. If I could, the way I play is like I take the price and the volume, bring those to the front of you, put it over the the charts, if that kind of makes sense. Put more emphasis on the things, the foundation right here, which is price and time, right? Time and price. Bring those forward and put it over the charts instead of the price and the time remaining behind the charts, right? If that makes sense. But that's my Bitcoin and Ethereum analysis. Pretty hard to find upside in this market, right? But anyways, let's go over the FANGs, right? FANGs are looking good. I don't know if you guys are watching FANGs, but almost every single one is breaking out higher. So Facebook, FANG, F, Facebook. A is for Apple or Amazon. But Facebook is pretty much at all-time highs again, guys. Right? And if you wanna put pattern analysis to it, we got a reverse head and shoulders, sort of. Right? If not, you could almost say a cup and handle. So Facebook looks good. Fundamentally, it's a strong company as well. 190 breakout. Let me know if you have any comments. I think this one's going to go higher. All right. Now, FANGs. Next one is Apple. Apple's buying their own shares. Warren Buffett's buying shares. I would consider picking some of this up. Again, educational recommendation. The pattern is so clean. This one, I love it. This is, again, daily, okay? Daily charts. And check out this pattern. So clean. Someone's accumulating. All right, and then we got the breakout, 190. So I think this one could go higher. Fundamental trade, reasons to trade it. Warren Buffett is buying, was it 70 million shares? I forget. Apple's buying their own shares. PE's low. Investment grade balance sheet, right? How many times? Well, 7 times the balance sheet and 17 times the earnings. It's different from commercial real estate, which we will analyze in a bit, because these commercial real estate right now, on average, they're trading about a 20 multiple, right? And I'll show you guys how to look at that. We're going to review not any specific properties today. We're just going to review collectively the bigger picture, and then we'll dive in deeper maybe another time to like specific properties. And we're also going to look at the business multiple as well, because I think it's very interesting when you could see the contrast. So going back to it, so that's Apple. Charts over here. Yep, that's Apple. Very bullish, going higher, in my opinion. Now, remember, if it's a pattern fail, then be cautious. But then this one, you could kind of like, in my opinion, it's like a name brand. It's the biggest company in the world, and
as long as S&P does well, this is going to skyrocket.
yeah, exactly. So like this one's like a high confidence trade. Is what I want to communicate. Yeah, exactly. So very high confidence right here. Let's see. Flipping back to Facebook real quick, we had it's not often we get a 200-day moving average play. I know Raj likes to backtest this and perform like the quantitative analysis. Just want to point out that it's not often that we get a 200 MA play like this. But anyways, going back to it. So Apple we looked at, Amazon. Right? I want to put emphasis maybe moving forward, like how we look at SPY and QQQ as major indices. I want to start looking at the FANGs as a major indices collectively itself. So Amazon, higher we go. Can't say much, 1600 breakout and going higher. Let me know if you guys can see what I do now, right? High volume gap up, consolidate, like Silicon Valley Bank, right? And then higher we go, another breakout, higher we go, stair stepping up. If you were to draw stair steps. Another setup right here, 1300. Double test right here, but as of most recent. So if it broke out here, I guess you could say breakout here, what's a good chance what do you think will happen over here? Most likely, according to just the patterns, right? We're just looking at technicals. We're not applying like how crazy this multiple is that they're trading at, 258, and about 25 times the balance sheet. Right? And their gross margin is about 37%. Keep in mind, gross margins and all this, they fluctuate as sales and earnings change, as well as competition. If more competition comes in, your sales goes down, and that means your margins goes down. So something to be aware of. FANG. Next one is Netflix. I think this one could go a lot higher at this point. Seeing like the aggressiveness of the charts, it wants to go a lot higher. If you were to ask me how high, right? You guys see the breakout, right, at 340, and setting up sort of. It might pull down, retest 340. It's a more volatile stock, but it wants to go higher. It's above the 20-day moving average, so a lot of momentum. If you look at my SMA 50, it did break the 50, but I consider this a bounce off the 50, respect of the 50 right here, and climbing higher with a breakout. 215 times its earnings, its income. Right? If you make 100K, well, let's say you trade at, you make 100K, you're trading at 215 times your 100K is what you're going to be buying it at. Because we're under the assumption that sales are going to keep growing, right? Same thing with the balance sheet. We're trading about 39 times the balance sheet. All your assets combined, we're trading 39 times that. Gross margins, it's a little bit lower because they develop their own movies in-house, if I recall. Overall, this chart looks good and it wants to go higher. Very aggressive. If this thing could pull back and touch the 21 MA, that's maybe a position to consider, but definitely the 50. The 50 is very respected. So if you're not in now and you're too afraid to buy it higher, you could wait for a 50 MA because it appears to be still respecting that. Amazon, Netflix, Google, right? These are major charts because, again, why is it so important? It appears that like everyone who is playing in the stock market, all the value is like cornered in the FANGs. The market's being cornered. There's a lot of just emphasis in that segment. And so if the FANGs don't perform as a collective indicator, then we kind of know. So it did look scary. It was on Real Vision. They kind of called a red alert that Google was breaking down. They said this was the most important chart in the world, or one of the most important charts in the world. That 1,000 did not break down, right? And now I'm seeing a breakout instead of a breakdown. So just analyzing the patterns that you're seeing, right? Falling, broadening wedge right there, and then breakout higher. So crazy market, huh? Potentially we could get more volatility, go back here, and then retest, and then bounce higher. But that's what I'm seeing next. And keep in mind, this is a gap up in very, very large volume. So that's a high conviction move. So Google looks good. What else do I have? I know they say FANGs, right? But I also added Microsoft and Baba. And the reason why is, this is my own discretion or my own flavor of analysis. I'm adding in Microsoft and Baba because Baba is right here. And Microsoft's up here as well. Netflix isn't really up here. But it's really an analysis of market leaders. So let's look at, what was it? Baba. Or let's do Microsoft first. Microsoft, believe it or not, higher we go. Insane. But I like this company. Again, if you played that Netflix gap up I showed you right there, gap right here, consolidate, higher we go. Again, a breakout around 95 or we broke out 100. 100 is a very psychological number, and we're above it. So if we could continue to hold it, I think Microsoft has plenty of upside. Now, I listened to their earnings call. Their revenue stream is very diversified, right? It's not just Microsoft Office products, which is very profitable for them. It's also LinkedIn, their data center play, Microsoft Azure, basically. What else? Microsoft CRM, which is I think it's called Dynamics. It's a very robust company with nice gross margins, right? And we know this gross margin is very robust because look at sales. Sales are very robust, right? In 5 years, it didn't really go down. It just went sideways, which is good. Consolidate and maybe go higher, and they profit pretty decently. If it's 20%, even better. But it looks like earnings are picking up, so they're cutting expenses, or because sales is not really growing. Well, okay, that's a lot of money. I shouldn't say it's not really growing. It's a lot of money. The multiple is not bad in this market either, right? 27 times the earnings. So I think Microsoft overall collectively looks very robust. And for someone coming in, like I prefer you playing this side of the market rather than the penny stock side. Because the penny stock side tends to go down, this side of the market tends to go up, which is the large mega caps. And Microsoft is a mega cap, 775 billion. I don't think it's not only going to be Apple who's going to be looks like soon to be a $1 trillion company, but several other ones as well. Check this out. We're only 50 billion away from 1 trillion. Incredible, huh? And I think it's going to happen. Just looking at the charts, looking at what they fundamentally do, their international exposure, et cetera, et cetera. Though, if you guys read Mary Meeker, who is an analyst or who was part of Kleiner Perkins, KPCB, this week was a very hot week. So many reports released this week, like the jobs report, the gold report, the venture capital internet trends report. That one released. I read that one. I wanted to talk about that today, but I don't know. It just seems like this second half of the year is so exciting now. All these reports coming out, but that report looked a little bearish. At least one of the comments I saw on LinkedIn. So if you guys don't know about that report, I'll pull it up real quick. A little digress. Let's see, Internet Trends 2018. This is a 290-page report, and it just came out. And you could get it on slideshare.net, which is owned by LinkedIn, if I recall. Actually, yeah, it is owned by LinkedIn. You could download it there. I think I have it on the desktop. I'm preparing this gold analysis for you guys. Okay, well, let's go back to the, whoa. Hope I didn't get disconnected. This is the report, guys. Highly recommend it as a internet entrepreneur or even enterprise entrepreneur. It's highly detailed. I want to go over this, but I want to make sure you guys want to hear me go over it because it's super long. Is this something you guys would be interested in hearing, maybe in combination of like another technical discussion that we have? Because today we're just analyzing the half-year mark and just pretty much all market segments. Okay, well let me know. So that was Microsoft. Let's look at Baba. And this is where the report is, where you guys can find it. Let's look at Baba. Same thing. Gap up, very high volume. Right? Now finally broke 200. Man, you guys don't know. I've been like patiently playing this one. To see that where it is today, I'm pretty excited. I think this one could go a lot higher. The people on Real Vision, as I'm listening to them, they are saying that this, okay, if you listen to the earnings call on this, they're very similar to Amazon. They have not only a e-commerce play, but they also have a database or data center play. So it's called Alibaba Cloud. It's very similar to Amazon, but the growth story is a lot better than Amazon. So check out the difference in sales right here, right? And let's look at Amazon. They're saying, so this is Amazon's growth difference, right there. But they're 39 billion, a lot smaller. So this one's very bullish. It's been super choppy, and I don't know how you guys would interpret that as. I would say it's a good sign, and let me explain why. Because the choppier it is, it's telling me that like over a period of, this is the 2018. Well, let's just say over about 7 months, we didn't go down in this range right here. For 7 months, long consolidation, choppiness, it only went as low as I think 170, and now it's finally breaking out higher. It's telling me that there's a lot of buying pressure. Oh, I gotta grab that door. You think you can grab it? Yeah, so I'm seeing a lot of buying pressure on this one. So for me, it's a safe bet to buy this one higher with options. But that's Alibaba. Looking good. So that concludes the FANGs, guys. The FANGs look awesome. I had a discussion with Tim throughout the week on the chat, and we're looking at indices, and the indices were kind of going sideways until the end of the week, but the FANGs were leading the whole week for some reason. So to me, it's kind of like things are pointing up. Okay, so flipping over to macroeconomics now. Keep in mind, these are things that we need to keep in mind moving forward in the second half. Fed's moving towards reducing their balance sheet, right? And as well as raising interest rates. This is a double whammy. Together, this means financial tightening of the economic system. Let me know if you guys don't really understand that, because they issued so many, the government issued so many treasury bonds in the past that the central banks accumulated, and as they accumulate, meaning they bought it, they push money into the system. And so they bought so many treasury contracts that now their balance sheet is inflated. They just need to reduce at this point, and by reducing, it kind of raises interest rates. So there's headwind, essentially. I'd rather trade knowing that there's no macroeconomic headwind, that instead there's a macroeconomic tailwind. That's a lot better. But the markets are pushing hard.
So the tightening, okay. Well, what does it mean to the stocks? Do you think that people, since there's less money, they're trying to remove money from the market?
Yeah.
That does it mean also the people are going to invest less in stocks, or? So
this is what we're going to talk about next week, because this I'm reading this. So the gold report that I talked about last year, the 2017 edition. The 2018 edition released on May 19th. I'm only halfway through right now. I know it's a long report, but it talks about all that. And I think I want to put together a better report, because I didn't want to just like be sloppy and go through all these pictures that I took. Right? I was going to do it today, but it was just a little too rushed. So I want to save it for next week to talk about gold. They go into the macroeconomics of it. And your question is, how will them reducing their balance sheet affect stocks?
Yeah.
So in this environment right now, so far, every asset class is kind of like pushed to the highs, because in the past we pushed so much money into the system. As of right here, this date right here, 2008. This is the line of, this chart is the Federal Reserve balance sheet accumulation. So this is what's on their assets. So let's say you yourself, Pishang, you are the Federal Reserve, right? As a person, you're buying all these government bonds, because as you're buying it, you put it in your, I don't know, like safety deposit or just say your account. In your account, you bought a ton of treasuries, and this is how much you bought, right? At the same time, when you buy treasuries, you have to pay with money, right? So you push a ton of money into the economy. And as you push it in there, the top players in the economy, well, I shouldn't say top players, but the capitalists, the people who pay attention to financial news, who know how to invest, and the great companies, they all appreciate. And does that kind of make sense? So it kind of push up stocks. Like, why does Apple appreciate? Because it's kind of like Apple has a great product, and if we give people money, people will buy great products, more likely than bad products. So it pushes up all asset class, real estate, bonds, and businesses, stocks, basically. So now that they're taking money out of the system by reducing their balance sheet, that means at this point you accumulated, let's say 100 contracts, you need to sell your contracts. What are you going to do? When you sell your contract, you gain money. So you're taking money out of the system because you're the Federal Reserve, right? You're selling your contracts, you're returning them, you're taking the money back. So if there's less money flowing in the system, then money's going to be in less hands, right? So there's pressure, there's macroeconomic headwind.
Can I add to that?
Yeah.
So basically, like the Federal Reserve, right? What they did, they had a small balance sheet at the beginning. We had a big mess, and then it grew so much. They're like $4.5 trillion, and that's like treasuries, mortgage-backed securities. They buy everything. And when they buy something, what happens is they give the money to the economy. They give the cash that goes out to the economy, and they take a piece of paper, put it in their safe, right? So that's how much paper they have in their safe, $4.5 trillion. So eventually, what happens? They have to clean their balance sheet, bring it down to where it was. So they have to take those paper from their safe and go to the market and say, hey, I want to buy, somebody's going to buy this from me. So the market is going to give the Fed money, it's going to take money out of the economy, and those papers are going to go to whoever owns it. So as you can see, we got a long way to go when the Fed starts, to take the money out of the economy. It could be a big mess. So that's why they do it so slowly. It's still at $4.5 trillion. They're like 4.49 trillion. So you better take them a long time to do it because they can't rush that thing because it's going to take too much money out of the economy. That's the main idea of the Fed.
Yeah, so the reason for this gold report, this is a little snack for next week, all right, guys? So this is my highlight right here. Let's see if I recall this chart. So this is the Fed balance sheet. It's kind of a messy chart, but the Fed balance sheet is the dark. This is the gold price, and then the funds rate is just the rate that banks are borrowing at. This is the projection. And so in this report, they're saying gold is a great position because this tightening is gonna. We don't know what's gonna happen. If it makes the economy go into a recession, we lose confidence in everything. Then I don't know, man. It's just let's talk about next week. How about that? I can't explain this week. Okay, up until now, it's been the everything bubble. They call it QE, quantitative easing. What they're really doing is just using technical terms. It's nothing crazy, right? But now we're transitioning into QT, which is just basically something I want you guys to be aware of moving into the next half or moving forward. If we could get pullbacks or breakdowns in all asset class, great. More opportunities to consider a position. But I'm still going to keep trading. So that kind of answers your question as to the asset prices getting inflated from what they're doing, the dynamics of the balance sheet.
What the Fed had to do with it, having $4.5 trillion on their balance sheet and put the money out.
Yeah, they just got to clean up now, and we don't know. We never. Okay, so I can't really speak confidently to it because we never. The report says themselves that we never done anything like this before. So I don't know what's going to happen, but they want to hedge with gold. It's a government hedge. And it goes into extreme detail saying how much gold the government has, how there's emerging economies are purchasing more gold, and how China and Russia are saying petro yuan instead of petro dollar, right? Instead of making the dollar the main currency to transact commodities, they wanted to increase their power. So the way I see it is not the disappearance of the dollar, but the emergence of other mainstream currencies. But that's going to be our talk for next week. It might be a little long. Anyways, so that's something to be aware of. The other one is At the same time that they're reducing their balance sheet and raising interest rates, the CBO says the Congressional Budget Office says government budget deficit is going to increase, meaning our taxes that we're paying is not enough for the government. They need more money. So if the government needs more money, they have to issue bonds, but they're not doing that anymore. They're not financing anymore. So how are they going to get more money if they're not going to expand the balance sheet? So as you can see, the economics, like the value, the risk doesn't disappear. Or let's say risk does not disappear. We could artificially manipulate value, but the risk doesn't disappear. It just shifts somewhere else, either through time or location, right? We could print all we want, but that's like sacrificing the future.
Kicking the can down the road.
Yeah, essentially that's what they're saying, in layman terms, right? But the way I see it is nothing is free, and risk is just really transferred either through some dimension. But keep in mind, the government needs more money. We're also at the late stage of the business cycle. S&P 500 is late stage. Though I have to keep playing it up. I know it's difficult, right? But I hope I explain in many different ways of seeing things, and you see how, I guess, difficult it is, and how we could find value in this market environment. Dollar midterm rally right now, but a lot of people are saying it's in a secular downtrend. So we do have a dollar rally, but anticipate a secular downtrend. That could be a relief on corporations, their earnings. So let's see what else. Recently we had a strong jobs report. Now, you guys understand how important jobs, increases in jobs are, right? Just think of average Joe, or let's just say yourself, right? You got a raise, or you got a job. The moment you get a job, you get to consume. That just seems like the average way of putting things. How often do you see people getting a job and then going and saving and investing? The way I kind of see it is people start to invest after they consumed enough. Would anyone say that's accurate, or what's your opinion on that? The moment we get a job, we spend.
Yeah, well, it's going to be basically having a good paying job when you're age, right? Because if you're younger, you're going to spend a lot more.
Yeah.
And when you get older and older, you're spending on kids more and more. And then when you get into later ages, you spend a lot less. So job is number one, and then age is the second phase in life.
So we want to see jobs grow, because if jobs grow, consumption grows. And if consumption grows, well, that's where the entities or businesses make their money. Let me see if I can draw it out real quick. We all work for a business, right? And you guys seen this chart before, but this is a market, guys. And the market, sends money. The consumption market, you could say that. We'll make it short for consumption. Of businesses, right? And let's say this is you. You go work for a business for money, right? This is you. You go to the business and work for money. Well, that business, their boss or whatever, they respond to markets, which is collective consumption. So if jobs go up, it's a cycle. If you could see it, it goes back to you and X, let's say 100 people, a group of people. So consumption has to keep going up, but in order to consume, there has to be money. So what I'm analyzing in this economic system, this is a little mini model. I want to know that money is still flowing smoothly, right? I want to know that money is just going everywhere, over and over and over. Because the moment I find some bottleneck, right, whether it be, no more jobs, there's a bottleneck. Or, let's say the business is doing bad, right? You're selling VCR tapes. Well, you're in the wrong market, but overall the other market's good. So this is just a simple model to kind of understand, guys. It helps to be in a strong business, like a business leader like Apple, in a growing market, though hardware phones are not really, mobile phones aren't growing, it's kind of consolidating or going down, right? So it helps to be in a good market, in a great business, and a great workforce would be like an all-star company. Great talent, great business, great market. And then on top of that, if you collectively analyze all the markets, right? If I times this by 100 as well, then you have an economy. You see what I mean? So it depends on what level you want to analyze at and how you want to segment the analysis. But this is broken down to simple business, person to business to market. And if we analyze the collective market, then it's economy. If we analyze the collective businesses, then it's the stock index. If we analyze the collective people, then it's the collective people's consumption. The way I like to think of it is as a salesperson, right? Well, I don't want you guys to think of me as a sleazy salesperson, but it's kind of like, the way I think is, okay, if you don't have a home, then I know you want to buy a home one day, okay? If I know you got a home, then I know one day you want to sell the home. Or let's say you don't have money, then I know one day you want to make money, but now you have money, then I know one day you want to invest. That's kind of like how a salesperson kind of thinks, or an investor, or just think of consumption, right? And who could produce that? We haven't jumped to it yet. Before I miss this, I want to put out, last week we talked about Softbank. They do have an ADR that you guys could purchase the stock. It's like 36 bucks. You can perform technical analysis on that. Just want to point that out real quick. Anyways, the other macroeconomic stuff.
Oh, you were talking about unemployment. I wanted to,
to
put in a chart real quick about
what
unemployment
you
in
got?
the stock market. So basically, to point out, like this one right here, we have the unemployment rate right here for the U.S. And then basically what happens is when we get the lowest unemployment rate of the entire decade, we're going to get a stock market top, right? And then what's going to happen, the same thing, right around, anytime we get a really low unemployment for the decade, we get a stock market top. As you can see, it went down here, the unemployment rate all the way to under 3.8, we got a stock market top. Then we went up, it went lower again to around 3.94%, another market top. And right now we're basically at the lowest in a long time. So I'm expecting once right around here, if the S&P 500 starts, histogram to go lower in the monthly and the weekly, to get a top right around here somewhere. Of course, the unemployment rate can keep coming maybe lower to 3.4, 3.3, gives another 6 to 9 months. But we already know they're getting closer from a historical perspective. We are getting close to a top. Yeah. So that was my point about it. Everybody says unemployment is so low in the history, and to me, that's a sign that we're getting close to the top in the market. As you can see from the chart going back to 1950, right?
You could also interpret this as like, if unemployment's going down, the economy's recovering,
yes.
And then after some point, the economy's getting really hot. Let's
exactly.
say you break down below 5%, then it's getting really hot.
Exactly. So basically, unemployment, the lowest unemployment rate in the nation is going to happen at the tops of market, as you can see in the previous, decades.
Yeah.
So just my point. And then of course, unemployment can keep going lower and lower. I'm just saying that we're close to it. That's all.
Yeah. Let me just do this real quick because it's about at the 30. I might not have time, so I'm going to copy and paste the stocks part for the group chat. You guys could look at those stocks that I'm kind of eyeing and my little notes on that. Because I want to talk about the commercial real estate and businesses before the end. So other macroeconomic things to think about, major asset categories are transacting at highs. So real estate at highs, stocks at highs, bonds at highs. That's what we talked about earlier. Commodities are at lows, cryptos are at lows. Other market segments. So I want to talk about digital businesses, physical, commercial, etc. Because it's a different flavor and it expands your understanding of how the world works. So my understanding or the way I look at it is kind of like this. So this is real estate and over here is business. Okay, the spectrum. And then over here you can put commercial real estate. So we're going to analyze businesses and commercial real estate. Residential maybe one day, not today. But what I want to point out is the time that you have to invest into it. I know I talked about this before, but this is something I really geek out to. If you purchase a real estate asset, residential real estate, you don't really, one could argue, you do have to put in work, but it's more passive. Over here is more passive, and over here is more active, right? And commercial real estate is about in the middle. Just want to show you that. What I mean by passive and active, meaning over here you invest less time, over here you have to invest time, right? But over here, the earnings, the income is higher. Income, not appreciation. We're just talking about income. Because if you were to rent out real estate, depending on your strategy, whether it be rentals or Airbnb might be higher. I don't know how high. Commercial real estate, looking at some of the earnings, it's okay. But businesses, from my perspective, have the highest income, but the most active asset class. So if you want passive, depending on where you are in your life, you want to look over here, but you could jump around. Now let's jump into the physical businesses and local businesses and just go over the multiples. One more drawing. What we're going to jump into is how I see the market, right? As you guys know, up here at the enterprise level, they trade at a multiple about 25. But going into commercial real estate, let me just do this. Middle market is also about 25 or 20, and then SMB is trading about a 2 to 3 multiple. Now, what I want to talk about here is digital businesses are trading about 2 to 5 multiple. For digital businesses, meaning they don't have inventory. It's just a website that people go to, right? And in commercial real estate, CRE, guess what their multiple is on average? In this current market condition, 20. That's the current market multiple. So let's jump into commercial real estate real quick. Today we're just going to do like not a super macroeconomic view, but just over the Bay Area analysis, okay? So when I'm looking at commercial real estate, everything comes down to numbers. It's nothing complicated. After the numbers, you just go out there and source the deals and network and talk to people. But look, 5%, 4%. So the trick is to look at cap rates. That's what I see as the go-to. It's kind of like stocks. The cap rate is the PE ratio upside down. The PE ratio upside down. So for the sake of this analysis, how do you know? Because we analyze, like I teach you guys to analyze stocks, and let's say you get used to the price to earnings ratio. Now you know cap rates. It's just a simple, what is the cap rate? Put 100 over it, right? So if it's 100 over 5, that equals to 20. It'll take 20 years to pay this $5 million with the current cash flow that it's getting. You see what I mean? So if we were just to analyze like how we know S&P 500 is trading at an average, the index is about a multiple of 25 to 30. The commercial real estate market, at least multifamily, I just have the multifamily filter on. We're not talking about offices or specific buildings like healthcare and industrials. We're just talking about multifamily. The cap rates are about 4%. So anywhere from 20 to 25 years. What do you guys think of that? If you were to purchase any commercial real estate property right now for that cash flow, it takes about 20 to 25 years to break even, but to pay off your loan or whatever.
I wonder how he compares that historically.
So historically, it's better to find a cap rate at 10 because 10% is 10 years.
No, I'm saying like was the cap rate in 2008?
Oh yeah. I don't have that data point. That'd be awesome though. But it helps you guys analyze the real estate market because you kind of like, oh, do I want this deal 10 years to pay off $2 million? And then after 10 years, you start collecting that cash flow, right? So when I'm talking to my mentor, we're saying like cap rates are so low right now because it's the PE ratio upside down, meaning PEs are too high. Price to earnings ratio of commercial real estate are too high right now. He wants to wait for cap rates to go up, which meaning he wants to see PE ratios go down before he considers transacting.
Does it say what kind of number he's looking for to go to 10?
10, 11, 12%. That seems to be like a sweet spot. So as you can see, it's not just residential real estate that's expensive. This competition already bleeded out into the commercial real estate segment. So if you wanted to purchase a commercial real estate with 4%, 5% cap rates, 20 to 25 years payoff, it's okay, but it's a stretch. Let's say we crash and cap rates go up, meaning PE ratios go down. Well, you're stuck with a 25 year payment. So you have to trade. It's just like trading almost. Now, I'm not saying it's impossible. I've seen strategies where they call it like core plus or value add. Value adds basically, let's say this building, right? It has 19 units, and we know we could add value to it because not all 19 units are occupied. So we could go in there and purchase like a 70% occupied unit, essentially meaning it's 70 cents on the dollar, and it shows like a 5%, but really 5% at 70 cents on the dollar, or 70% operational. So we go in there, we purchase it for $5 million, and then we go triple net lease it up and get people to rent it out, and then we have a different cash flow picture. We secure the contracts, and then we sell the entire unit at market cap rates. So then this $5 million play could be like, I don't know, 7 million at current cap rates. So it's a strategy where you go in there and you renovate a little, or not even have to renovate. You could do financial manipulation, which is basically hiring people to rent out the space so that the collective cash flow is higher, and then we'll trade it at 5% cap rates. So basically it says 5%, but only because it's not fully occupied. So that's the value add right there. We add value, and it's really actually a hidden 10% cap rate or something like that. So that's one of the strategies right now. You guys have any comments on that? Like, how do you find that type of strategy? Similar to real estate, right? Let's say if you wanted to flip homes. Man, I listened to this awesome podcast recently. I think I told you guys already, but a 19, 20-year-old kid, he flipped a home here in the Bay Area. But what he did was he found off-market deals. I never thought about it that way, right? Like any deals that you find on Zillow, Redfin, Realtor, the market already knows its existence. But how do you find off-market deals? You got to cold call. So this 19, 20-year-old kid, forget 22, whatever, he spent 9 months or something, close to a year, or 13 months, whatever, and he just cold calls for different owners of distressed properties. He goes on Google Images and just looks up distressed homes, and he gets it 70 cents on the dollar. Right? So if you get listening to these podcasts, if you want to flip a home, it's not about the selling price, it's the purchase price, which is the strategy. The strategy is to purchase it lower than the market. So you got to find a certain profile, someone with a distressed property who doesn't really know about like market value or just really motivated to sell, right? And you secure a contract, and then I think Sylvia knows this segment, which is wholesaling, right? Is that right, Sylvia? If you're online? So I think you're in the real estate market as well, but I'm not sure. Let me know. I hope I didn't mute you. Okay. Okay. Tim's over there in the back. Anyways, so that's a strategy, right? Similar to what I said with commercial real estate, the value add. Flipping home is the same thing, value add. But it's all about the purchasing price. You got to go out there and sales it or negotiate it. So having great sales skills is essential. A buddy of mine keeps on like reaching out to me. He's like, man, like, come on, like, let's go pierce this market segment. Let's go source deals. So he's telling me like, it's not even hard. Like I could just go on like buy a list and just call it down and find a deal, right? Because the world is the local world is so big. There's thousands and thousands of properties. You just call any one of them, and each person has a different story. But if you could find a deal, get it 70 cents on the dollar, your flip, if you were to flip, you wouldn't be scared. Or let's say you get a commercial real estate property and it's 70% occupied, right? Not 70, which is similar to 70 cents on the dollar. You go in there, triple net, lease it up, and then you sell the collective unit for that market cap rate. So what do you guys think? 20%, cap rates at 5%, 4% in commercial real estate, meaning 20-year multiple. Do you guys like that in this market? It's up to your discretion, right? Flipping over to the business side. I just want to show you guys what the current cap rates are at. If you go a little bit out into like Sacramento and Stockton, I think you get about 7-8% cap rate, if I forget. Right? See, like it went up to like 6-7%. So not bad, 9%. So like almost like 10 years to pay this one off. I don't know how many units this one is, but it's an apartment. So just another strategy, and this exercise, the purpose of it is to kind of show you like the flow of cash flow versus a business. At the end of the day, I still like stocks and businesses, but I got to figure out how can we make a business less of active assets and make it a passive asset. So automate your business essentially, because the income's a lot better. But I mean, there's so many strategies out there. So I wanted to point this out. Let's flip over with the 18 minutes we have left. Let's flip over to the business side. Similar to, they're all cash flow at the end of the day. But in this market segment, for some reason, it's trading at a 2 to 3 multiple. The more I look at it, let's see, even the highest price ones. Let's go to, this is Santa Clara, right guys? And we're gonna sort this by price. Oh, it's already from highest to lowest. Right, even the highest ones are a little bit higher. This one's not, it's like a 7 multiple, right? You bring home 2 million, but you gotta pay 14 million. So in about 7 years, you pay it off, which is a lot better than 20 years for a $14 million purpose. So let's give you that compare and contrast. Even this one, okay? So this one is a established and growing specialty cleaning service business. It's selling, asking price is 4 million. So about 3-ish multiple, right? If you buy this in 4 to 3 years, you start netting 1.2, assuming you sustain the sales, right? It's active income. Going over to the commercial real estate side, if you purchase something for about 4 million, what do you get? What's the cash flow? Let's look at the, let's say 5 million, there's no cap right there. Let's go back to Silicon Valley over here. If you purchase something for 4 million, okay, 5 million. 5 million in about 20 years, a little bit less than 20 years, you start collecting that income, but it's not as big as this income. You see the compare and contrast that I'm trying to show you guys?
One question I have, that's assuming that the economy stays where it is right now, robust. If we have some kind of recession, obviously all the numbers are going to change.
Exactly. So the business is a little bit different. You have to really truly understand business. And so when we analyze stocks, I'm not just showing you technical stock charts. We're trying to fall in love with these type of businesses and like really understand and appreciate sales, marketing, operations, accounting, finance, all that. Because if you master that, then you could really operate a business that has more lucrative income in less time. So again, we're looking at 4 million here. In about 4 years, you start netting 1.2 million, assuming sales remains stable, right? And you could always find that out, working with a business broker or a investment bank. But over here, you're right. People need a home. So let's say in a recession, this cash flow is a lot more robust, but less risk, less reward. More risk, more reward. So we're seeing that compare and contrast, and getting you guys to be more confident about this space, because I want to break into like something one of these days. Anyways, so do you guys have any questions on the business segment? We're looking at it a little bit more today. Here's about a 2 multiple, not bad. Profitable machine shop telecommunication. Now, there's one more segment I didn't show you guys today. Recently, so you guys know I talk about businesses a lot. Small to medium-sized businesses that us individual investors could buy. So as of most recently, the IBBA had their 2018 top business broker, right? And I told you guys 2016 or 2017, the top one was this guy. Well, he's not the top one anymore, right? The top one is actually the other resource that I always go to. It's Empire Flippers. So this one's the top resource now. This is the top performing one, and they're just brokering digital businesses. The top business brokers are brokering digital businesses. Sorry, I repeat. Not the ones that are brokering physical businesses. Though I'm not saying that there's no market for a physical business. It's just that this just further confirms that macro trend. The whole data centers are growing. The whole software is important. The whole digital business economy. A growing segment. So if you want to look at digital businesses versus physical businesses, right, which is what we did over here, you could jump over to either feinternational.com or Empire Flippers, and then we look at some of the listings, right? So let's see what some of the multiples are. Again, this one does it by monthly. So I had a call with one of the guys at Empire Flippers talking about business, and I learned something new. So right now, this segment is growing and it's new. The issue is that SBA lending does not really cover this segment. So you have to pay up to like 70% of the asking value. And then the rest could be like seller financing, which is like the owner, borrowing a loan or making it cheaper for your behalf. As you operate and pay him back, him or her. So this segment, you're gonna need more capital. But it's about the same as a business broker, like the multiples that I'm seeing. So if you're passionate about something like investments, you could find something like a finance e-commerce website. right? And buy, this might be something I'm looking at. Let's check it out. I would advise, if you want to get into the segment, I would advise, checking out their monthly profit. This is awesome, right? Revenue's going up. So there might be a premium on the cost because of growing sales and earnings. But similar to how we analyze stocks, right? This is a little bit different.
How far do they take it back? Like 10 years, 20 years?
I think for just display, they only have like 2 years,
Okay.
1 to 2 years. But if you work with the business broker, you could ask to get some more data points. So something that eventually I want to do. This is the segment I'm looking at. Because I know how hard sales and marketing is. At this point in my life, I don't think it's I study a lot, and then I got some money. The hardest part is sales and marketing. Getting people to know you. So that's just another segment if you're interested in it, and I wanted to review it. So let's buy a website. You guys have any comments on like the contrast between real estate and a business, and like the multiples that these things are trading at? If you go back to what I analyzed so far about the whole world, we said that real estate are at highs, so is commercial real estate, because cap rates are like 20 years, PE 20 years. Stocks are also at highs, but you just got to play it higher and find the value stocks, or fundamentally value or business model value, right? Like a Salesforce CRM stock, because it has high value. Or real estate, you got to find off-market deals. Commercial real estate, you got to find less than 100% occupied properties and negotiate the price down. Bonds are at high. If you buy now, you get locked in, but you don't lose your money. You just lose your time because you're buying at a higher price.
Inflation risk.
Yeah, that too. Commodities are at lows though. Cryptos are at lows. And I would also put that for some reason the SMB business, buying a business in that SMB segment, it doesn't seem to want to grow to 2 or higher than 2 to 3 multiples. So that's attractive. Knowing that in this overvalued economy, we can still purchase a business and reap our gains after 2 to 3 years by operating it, right? Meaning you could potentially sacrifice a work income to do that. But being your own business owner, you have to really assess like how much time does this business cost. The way I see it is digital businesses have like the best time efficiency. It's like low, 3-5 hours of work a week for like the same cash flow as like a physical business that's doing like 30 hours a week. So up to you. I mean, it's 30 hours of like sitting in the shop and chilling out with your internet, right? If you own a cafe or something. I see a lot of business owners do that. But it's super awesome to see their cash flow, in my opinion. So going back to it real quick, let's just analyze one business. I don't know why this one's trading at almost a 1 multiple. Right? You gotta read it and see what's going on, because it's asking about almost 15 million, and it's yearly. Oh, this is not earnings. This is revenue. So price of sales is about 1. Right? So we're looking at this one. You see what I mean? So I know I'm kind of tricking your mind in a way, right? When we're looking at stocks over here, right? We're looking at price to. Let me show you. So yearly revenue, that's sales. So when we're over here in the stock market world, we're looking at, sales is 39 billion. Over here, sales is 13 million. And now asking price is about 15 million. Over here, asking price is 500 billion, right? And it gives a multiple of like 53 on earnings. Over here, we have a multiple, I don't know the price, assuming that they're asking for this, then if they're asking for about 14 million, let's divide by half. So this makes about 7 million, right? So income is 7 million, right? Versus over here, income is 10 billion of the sales of 40 billion. That's impressive. Oh God, that's really impressive. It's Alibaba. So good news to you guys. It's not a waste of like going so deep into the analysis of the stocks, because it as you just saw, like I demonstrated, that knowledge bleeds out into all this other market segments that you can analyze. And so it becomes less intimidating, I hope. because I'm getting super excited on some things that are going on. So moving on. If we have time for the stocks, I could review some of them. Let's see, real estate. Oh yeah, I want to point this one out. So quick recap, digital business about 2 to 5 multiples, physical business about 2 to 3 multiples, commercial real estate about 20, 25 multiples, right? Residential real estate, this one's a little bit different. It's all like asset appreciation focused from what I'm seeing. But I want to show you guys this. I don't know if I showed you guys this yet, but check this out. This is the Zillow Research. Did I show you guys this already? Do you remember? No? Number 1, home value index. Don't get intimidated if you can't, like, you know, if you're finding it so crazy in this economy. It's,
It's same as this, higher than San Francisco.
yeah, so it makes me wonder, you know,
Santa Clara, that's why.
right? So again, I'll draw that chart. This is what RE prices look like right now.
I'm sure
Right.
Santa Clara is included in the San Jose area.
Yeah, I'm pretty sure it is too. And then I would say this is like the wage line, right? Now, I didn't talk about this last time. Like we all, you know, we go to work, got a job. I didn't talk about this last time, but do you realize that this is the spread right here, right? The difference, the margin, and this margin means you go to work for income, right? And eventually you want to buy a home. Well, you got a side hustle right here, huh? But I want to point out that it's funny because for some reason, you know, real estate naturally has an upward pressure. Is that right? You guys ever think about wages that, you know, corporations are trying to make them more efficient? It's a downward pressure. Isn't that funny? Like, people put a lot of time into getting a job, going to work, but they never think about the wages, how there's a downward pressure. I felt that pressure recently. I told you guys last week because my quota got increased. So I gotta make more deals. I gotta get more deals. The sale is a sales thing. Yeah, just because, you know, they want to make more money. So it's just an interesting economics that came to my head, that wages have a down pressure, but like 90% of the population are chasing the wage. But you know, real estate prices have an upward pressure. Just something interesting to analyze. I mean, real estate prices could go down, but I think naturally with the upward pressure over time it's going to go up. So just something interesting I wanted to point out there. Any comments or on that? Let's look at some stocks. Was that interesting or was it okay? So that was pretty much it for what's going on around the world for the 6-month year-to-date mark, guys. So recap, we analyze the performance of specific broad asset classes, the stock market sectors, which sectors are performing, technology continues to perform, which countries are performing, USA is about 2.9%. Market overview, we looked at all the indices, majority of indices, except for one, looks good. Dow Jones doesn't look bad, it's just going sideways. It looks okay, but majority of indices look good. World indices look good too, except for Shanghai looking a little bearish. Nikkei and these specific indices or economies, they're kind of bouncing. It's not a downtrend. I don't see a downtrend over there. Volatility looks good, right? USA market volatility. Bond prices are, you know, still high, but I don't see any inversion. Commodities trending higher. That, you know, is considered cheap, I guess, but no income, no cash flow from commodities. It's all supply and demand. Cryptocurrencies are also at lows. And then we looked at the stock, the FANGs, and they're like rallying too. And we talked about the macroeconomics, things to keep in mind. And then we reviewed other market multiples in other market segments like commercial real estate. So let's say we have a recession and we know cap rates are going up to 10. Would you guys consider investing with a 10% cap rate or 15% cap rate? That's kind of attractive, right? 100 over 15. How many is that? Yeah, not bad. 5, 7, 8 years. So it's all about the cap rates in that world, which is, I don't know why they use cap rates. It's because it's I find PE ratio a lot similar, but I could just easily flip it upside down and get a cap rate, right? We could flip Alibaba upside down, right? And just say this is getting mixed up right now. Price over earnings. We can just flip it upside down and make it whatever. I won't give myself a headache right now. We could give this one a cap rate too, but it'd be like super low. It wouldn't make sense. So yeah, let's talk about some of the stocks while we still have. This week, for me, I had a good week on AAOI. I want to point this one out and show you guys the patterns that I saw up until the breakout. This one was highly shorted, 78% short. So short squeeze is very probable. But the pattern that I was playing, you might not see it now. I gotta flip it back to the previous chart. So this was me bottom picking. This one was a good one. That breakout right there. Again, I'm just playing breakouts. 35. I sold out here, and then the next day I was impressed, really impressed, because this was a really quick game. But I think this one might be a reversal. Raj, I know you were looking at this one. You like this company, right? It's breaking out in heavy volume here on the weekly. So I'll continue to watch this. I want it to retrace a little, or at least set up sideways and then stair step higher. That's what I'm seeing with AAOI. Let's look at Softbank. That one's at 36. Softbank, because we talked about it last week. I figured I'd pull this one up. 36. Just performing a quick, yes, double that 25. Yeah, it's pretty awesome. My issue is that I need a bet as big as like a home, 1 million shares. Yeah, that's where the payout would be. Yeah, this is Softbank right here, performing a quick 5-year analysis on it. Just the technicals, right? Trend right there. It's in downtrend right now, but find a level where we see support and then break and then go higher, right? But if we could clear the highs, then higher it goes. Now keep in mind, Softbank is the company with the CEO that's running the largest venture capital fund in the world. So, what else? Actually, I did have some updates for you guys. Let me just give you some updates. So, this week, SK, he's in Oregon right now. He's not here today, but he connected me with a guy from SVSIAN, which is, it's another meetup with 14,000 members. And we kind of started talking, and he wants me to, he needs help running these mixers, and I'm trying to build up my network in the Bay Area. So I might subscribe to Hacker Dojo and run these mixers. So I might reduce these meetups to like 3 times a month. Now, I know I might be kind of aggressive running meetups every week. I don't force anyone to come, all right, guys? Like, if you guys feel tired, I don't want you guys to get burned out, or just, come for the sake of you want to learn more, and Kay wants to teach so he can learn more too. I don't want to put pressure on anyone to come. I'd rather you guys come, under your own will and truly want to learn. That's like the ultimate thing. Like, only after 1.5 years of running meetups, I could handpick who I know is serious about investments, right? There's been a lot of faces that come in and then they leave like, they come in, they come for like 10 weeks and then they disappear for like a whole year and then somehow come back, right? But we still keep in touch. So I love the whole relationship building and stuff. But if I ever find something 70 cents on the dollar, I'll give you a phone call or something, or I'll give you a text. Hey, would you be interested? Yeah, that'd be kind of cool. So this guy, yeah, we might work together and run mixers once a month. That's just in discussion right now. Let me show you his meetup. SVSIAN. SVSIAN. Oh, let's go. Okay, I won't show you his meetup, but he has like 14,000 connections. But he's really connected. This is me trying to maybe potentially pierce into the venture capital ecosystem, right? Because just like real estate, to find those deals, like those off-market deals, you have to network, cold call, talk to wholesalers, whatever, right? In venture capital, it's the same thing. Like, you're trying to transact in the private market, well, you gotta have the network. When I was at Silicon Valley Bank, right below me was Silicon Valley Bank Capital, SVB Capital. They hired people to, like the managing director, he had to go and have dinner with people all day long, just to network and source the deals. So I inspire you guys to go out there and network and meet as many people as you can, bring value, and just, I guess, talk intelligently. Another question for you guys is business and sales development, basically sourcing deals, of interest to you guys? Like, is that something you guys want to learn more of? Because I buy technology, like I pay for Salesforce $800 a year, Sales Genie $3,000 a year to like get leads and stuff. Like, do you guys want to learn more about sales and marketing in this meetup? Because I know we talk about like stocks a lot, and then we kind of branched out into commercial real estate, their multiples and all that. But do you guys want to hear about like how to find deals? Yeah? Okay, because that's something I really want to aggressively start pushing. Okay, Steve says yes. You want to find deals? All right, I'm excited for that. Basically, if you guys, it's really just pick up the phone and call, send direct mailers, right? If you want a private real estate deal, off-market deal, you got to do whatever it takes to be at the top of their mind. Not in their face, not rudely in their face, but just be at top of mind.
It's a lot of work.
You tried it? You tried it?
No.
So I want to show you this segment, like how to do sales, because what you guys don't know is, okay, this is how I feel about sales. Like, let's say I'm using technology, right? I'm using Salesforce, I'm using advanced technology. I feel like someone with like a robot armor, compared to, let's say it's war out there, right? Shen Tzu's Art of War. With my technology stack, I feel like I'm a robot hunting for deals, doing battle for deals, right? Versus like the other guys, they're in like a samurai suit. Right? They're in a samurai suit. You just got to go out there and hunt for deals. So no matter what, like build up a network, because whether that network is focused on venture capital or that network's focused on real estate deals, you got to go out there and source them. So I could teach you guys like how to talk on the phone, or how I talk on the phone, and how we do it in enterprise sales. It's simply like, like the techniques that I learned. It's not like, don't sound like a telemarketer. Like, hey, this is Kay calling from here. I'd like to introduce you to this product. It's more like, we're talking business. So it's really negotiation and all that. That's something I want to teach. That's something I pitched to this guy. His name is Wang Yu. Just giving like technical workshops on enterprise sales, how to source deals. Because at GE, I gotta source money for them, right? If you get into venture capital, you gotta source deals for those VC deals. You gotta source entrepreneurs. So why not create like an entrepreneur mixer, right? Which is what SVSIN does. They just run mixers and events for entrepreneurs and tech people all day long. But they own that platform. So same thing with real estate, right? Find off-market deals, find the numbers, dial down, send direct mailers, get out there and push the sales. But if you're not the sales type, you're more the analysis and investor type, well, that's okay too. Like there's methodologies to it. But that's something I want to just ask, and ask you guys for permission if that's something you want to hear about. I don't want to start talking about sales and marketing and then no one shows up and they're like, no, I wanted to learn investments. And also let me know if I'm going everywhere. Like it might be like, whoa, like we're looking at every angle, but at this point for me, it's pretty simple. Like just looking at cash flow for the different investment types, it's not that difficult. So it's sort of easy for me to maneuver. Another update is the stock market game that we have. I'm still playing it, but as of recent, I can't seem to transact, so it's been put on hold, I guess. But the portfolio is still at 700,000. I'm trying to make more trades, but I can't. It's being glitchy. So maybe this might not, we might not continue, or I'll see. Because I know other people are playing too. P. Shang is still up here.
Well, I'm not.
But you're not paying attention,
Yeah,
right?
I'm not.
Yeah, it's just a fun game that I do for the club and show you that, how much money you really can make with options. It's very lucrative if you could bet bigger. And that's something I need to do, but it's...
Yeah, so in the simulator, it doesn't show, for example, if you're out of money, that there's no buyers. Even if you want to sell, there's no buyers.
Oh.
For pivot trading, the best one is the one I told you about, WallStreetWarriors.com, I think it is.
Okay, looks like I gotta go. Something's up. So Guys, for the people online, I don't want to. I know I skipped this segment, but you can go ahead and take a picture of this list that I have for the stocks that I'm kind of looking at. Let me put it right here. That's AAOI. Okay, well, just know at the top is AAOI, but these are the stocks that I'm kind of looking at for next week to add or to cut. There are 2 shorts in here. One update is Roku. Avoid this one because the Citron Research, he's a famous short seller. He's not short anymore. So this guy's a professional short seller. Roku, that $10 move was good, but I just gotta wait for a breakdown. It seems like this market segment might be growing. Everything else is something I'm looking at. Disney's at support. Yelp I like because corporate buybacks at average of $40. Baidu, this one's super volatile. Be careful, Baidu. I've been hit with this one a few times. Like my account would go up and down 1,000, but that's like the size I'm playing at. Nutanix bounce, I'm in that one. Holding the gap, Silicon Valley Bank, Micron attempting to break out. SK did a great analysis on this, showing that the market opportunity for this specific company is really growing. You guys should ask him on that. Arista Network is finally moving. I know it was at 245, 250 price level. Let's see what else. Yelp sideways. Disney's at support at 100, right? This is a bottom picker, but it's Disney. So if you're gonna pick this one, it takes time to play out. CRM, man, that company is gonna go bigger in my opinion. Educational recommendation only. SPLK, respecting 50 MA, Workday, gap down. This one I'm avoiding for now, but I still like Workday. Workday is enterprise level HR management software. So I geek out to enterprise software. We'll continue to analyze that market segment. Now, this one, ServiceNow breaking out higher, strong market growth. What else? Spotify. I'm still looking at this one for a short, but I want to see 150 breakdown for that one. Let's see what else. Costco. This one's attempting to break out hard, but not yet. Nike. Higher it goes. Palo Alto Networks, guys, incredible resilience in this one. Like we had a market, volatility. This one kept going. Intel, higher because of data center play, makes sense. Data center is the next big thing. Nvidia showing strength. ASML respecting 100 MA. Adobe is industry leader and going higher. This one is like, an all-star. PayPal 200 MA bounce, head and shoulders rejection. So this one's looking bullish. Intuit going higher. I like that one too. SAP. This one might be a longer term play, but I'm seeing a bounce on SAP. Boeing amazingly keeps going higher, like an airplane taking off. LOL. YY, it looks like a reversal. So that's what I'm seeing in the markets for like a short to medium term play. Go ahead and take a picture if you want. But I gotta go now. It looks like I got an event to go to or something. But yeah, we'll catch up next week. Again, guys, don't feel like you're pressured to come here. It's for learning. Next week we're going to talk about gold, that gold report, and dive deeper into it. Hopefully I'll finish it. And we could analyze other things and do sales and marketing, or learn about sales and marketing and all that. So thanks for coming. All right, let's catch up next week. I hope they could hear me.
Huh?
I hope they could hear me. Yeah. All right, guys, I don't have any feedback. I'm gonna shut it down. I don't know if you guys can hear me. Oh, loud and clear. Awesome.
Yeah.
Awesome. Okay. All right. See you.
Well, I got the housing chart for you, the home price in the last 20 years.
Oh, you sent it to me?
No, it's right here. I didn't send it.
Okay,
I just have it on my screen.
Okay, no problem. All right, man. We'll chat soon.